Everybody had a great weekend and a great trading week last week. I sure did. So, why don't we have a look at what I'm looking at for next week? And let's start by looking at the DXY, the US dollar currency index. I'm going to look at the Japanese yen, which are the two currencies that I trade. I'm going to look at metals and US equities, right? Let's start with, the DXY. Super bearish on the US dollar, right? There's absolutely no reason to look for shorts at this level. What I'm looking at here, let's go to the hourly. Now, I haven't seen this chart after, non-farm payrolls. On Friday, I only traded gold and US equity, so I haven't looked at the US dollar chart. So basically, what I'm looking at here is this. If you look at this, the US dollar price took out these lows. I am looking at this level as a trap. So let's go to 5-minute chart or so. I'm looking at this level as a trap in the sense that if I see a pullback towards this level, I am going to be very cautious and looking for all of this liquidity to be taken out, maybe to get short higher around the 102.90 level, let's call it. We do have a small imbalance or inefficiency in the market here. No, there's right now, I'm going to remove all the drawings. Right now, there is very little that I can look forward on the US dollar, setup wise, because of this pullback, right, towards my short level, right? So I'm going to see how it goes on the open, but talking about the Japanese yen basket, guys. Now, the Japanese yen basket is very bearish. But if you notice, let's go to the 4. Actually, no, I'm going to stick with the 1-hour chart. If we look at the 1-hour chart, what you might see here is price, basing or creating, a base for a reversal, which can actually, be the case. But, the money in this market is made on the short side, but right now, I will probably be looking for longs. Now, there's a couple of things that I want to go here. There's a big imbalance here left on field. The market has to price itself efficiently in the sense that it has to fill these gaps or these imbalances or these inefficiencies in the market, right? But I consider this a trap too because of these lows. Now, if we go back in historic price action, actually, I'm going to go again, to the hourly chart. If we go back in historic price action, you can see that this is actually, the previous key level, right? The previous key level, this low right here. So if we go back to the 10-minute chart or so, on the 10-minute chart, this imbalance is even bigger. So it really doesn't matter because I wouldn't trade, the fill of this imbalance. I wouldn't trade. I don't have a setup on this imbalance because I consider this low as a trap. I showed you guys that this is the level or the previous broken highs. So what I'm looking at here is possibly a pullback towards this level, price taking out these lows, creating a new lower low, right? An impossible move higher. This is the trap, right? That I always look for, right? Weak players in the market trying to trade the pullback towards the previous broken high. So very often what is going to happen is that this, this new low, right, will create a ton of liquidity in the sense that stop losses for these players are going to be placed very close to their entry. Why? Because there is no structured low to place their stop losses. So price is going to take out those weak players in the market, and the actual level that I'm looking for, longs on the Japanese yen would be around this breaker, so around the 69.53, maybe a little bit higher, right? Maybe a little bit higher right here. So let me just delete this line. Yes, right here actually. Placing my stop loss below these lows, so this move is the one that I'm looking for. Of course, that I'm not going to trade the Japanese yen basket. I'm going to go look for trades on the Japanese yen basket long on the pound yen or on the euro yen. On the pound yen, my friends, I will look for shorts if I'm looking for longs on, the Japanese yen. Again, I do not have a setup short on the pound yen. Looking at the euro yen, it's much better. This market is much better to trade the short side, the long side. I'm sorry, on the Japanese yen, in the sense that we do have. Actually, we don't have this protected high, right? So I need to see how this market opens. But again, here is those weak players in the market, trading the breakout. The breakout of this key pivotal level on the previous lows and price. This entry didn't even got to that level. So very possibly we are going to get a sweep of these highs, right? For an entry short on the euro yen around the 156. I always place my entries below that imbalance because I do want to get filled. So around the 156.60, 156.59, let's call it, with stop losses above the structure high, right? So if we go to the hourly chart, I would definitely target. My first target would definitely be, Friday's lows right here, and I would carry on the last portion of my trades towards this level, 155. The 155.10 or so. So we're talking about a possible 125 pip move short on the euro yen. That is if what I talked about on the Japanese yen basket plays out. Now let's talk about gold. I am long gold, guys. I am long gold, right? I place a long on gold right here. So my entry was on the hourly chart, right? I was looking at price breaking with the structure, changing the bias in this market, and breaking with the highs, breaking with the highs, and breaking with the highs. That means that I'm looking for longs, right? And more so because I think I went to the 8-hour chart. I was looking at the bounce of this key pivotal level. So this is kind of a swing trade, right? Kind of a swing trade. So if you look at this, this has been a key pivotal level in historic price action for a while, right? Just have a look at this, bounce, or how strong buyers jumped into this market here. And of course, when price broke with this level, this is the level that buyers were protecting. And also, when sellers took control of this market, this is the level that sellers jumped in again. So when I saw this bounce, right, on the higher time frames, I went to the hourly. Let me just delete that. I went to the hourly and I waited for the confirmation of, trend shift in the shorter term, because this is the hourly, so we cannot be talking about short term. But in any case, I was looking for this. This is the imbalance that I took my entry on. So I placed my buy stops at the 1909.80, I think. I took a little bit of water, on my boat, in the sense that my trade drew down a little bit, but it worked out. It worked out because this was a high probability setup, and I'm looking for higher highs, right? I'm definitely looking for the real break of the structure around the 1937. Let's call it 1937, 19 what? I'm sorry. Let's call it 1938 or whatever. These highs, right? I'm looking for the break of these highs. The main reason that I took, I think 70% of my position off here at the highs before after non-farm payrolls is because of this, right? Because this is such a strong level, right? And I don't know, no one knows if buyers are going to be strong enough to break with that level. And well, I mean, and I was trading the upside on a very, very, very weak market. So should price break with this level, right? And this is where I'm going to tell you what I'm going to look for, maybe on the 50-minute chart. So if price breaks with this level, there's a couple of things that I'm looking at, right? So if price, opens higher or whatever and breaks with this level, now I would love to see, first of all, a bull trap, right? Breakout traders getting trapped on the wrong side of the market and getting taken out, right? And then I would love to see a lower high printed, for fake out traders or weak short players in the market, and then getting taken out. And I would love to see an entry around the 1920, right, for further upside. But in any case, because of non-farm payroll Friday, price action is really, really choppy. And because of how my entry model works, I am not seeing very clearly what to do. Now, let's go to the NASDAQ. The Nasdaq is a very, very, very funny story. I took a short here. Actually, my short was on the 3-minute chart, as always. Let me just go back. So I took a short. I took a short here, right after the break of these lows. My short was here with stop losses above the structure highs. I took all of my, short position off after this big, 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 big move to the downside. But if you notice here, we do have a ton of strength around the 15,030 level. Now, two things I'm looking at on this market. I am definitely not looking to buy, this, let's call it support zone, right? I'm not looking to buy these lows. What I'm looking to, or what I'm looking for in this market is for a rally, right? And this is the question that I get asked a ton, right? Because this move was so strong, there's a ton of inefficiencies in this market. So which one am I going to trade? Actually, there's just the one. So I would love to see a pullback towards this level for possible shorts in this market. In any case, I am not. I don't have anything clear for the open, so I'm very possibly not going to be trading the open. But this is what I'm looking at for on next week. Trade safe, and I